Welcome to another episode on Prophecy Trades. Today's video, we will be doing a technical analysis on gold based on our trading session in the London overlap New York session earlier this morning. We executed a handful of trades. We were profitable this morning, and we're going to dive into from entry to exit and trade management. And if you are liking these videos and they're helping you out on your trading journey, please give a thumbs up and subscribe. So with that being said, let's dive right into it. So first things first, we're looking at a commodity currency pair, gold, also known as XAUUSD, and I will be going to the 6:30 time frame based on my trading session hours. So we're gonna mark up the 6:30 a.m. just 30 minutes before the London Open. The New York Open. So we're gonna mark off 6:30. And typically I do not trade anything past 10:30 a.m. due to volatility tends to calm down. I like to trade with high volatility, a lot of pip movement. So I'm gonna mark off that 10:30, and this basically blocks off my zone, helps me gauge of how much time I have left to trade, where are we at, and where can volatility tend to fall. So with that being said, we executed our first trade at my MetaTrader says 7:07 a.m. So I'm going to show you exactly what I saw and what prompted me to get in the trade. So I'm going to jump to the higher time frame, the 15-minute time frame. And what I did see, we were at this line here. Basically anything from here on was not there. So what we're going to do is I'm going to be trying to identify a market structure. So as you can tell, their price was actually trending downward on this 15-minute time frame. We're just descending. We're making the lower lows, lower highs, lower lows, lower highs, lower lows, and lower highs. So for me, I want to make sure that I understand the movement where we are in the market. So I'm going to just draw for educational purposes the last lower highs and lower lows before that market structure shift. So we're going to draw it from that's the swing. This is the last lower high. We're going to bring it to this lower low, and this is going to be a potential lower high. We failed to make a lower low. Price somewhat double bottoms, and then we have this nice clean market structure shift at this 4063 level, and price then begins to rally in the upside. So with that being said, I now understand that I'm no longer looking for shorts, that I'm looking for longs based on my trading session directional bias. So the market structure shift is here. So for me, this is at 6:30. I'm now only looking for longs. So that's how I've identified my daily session bias. And we also have an additional confluence of a 50 EMA. It's acting as a dynamic support. So for me, this is another long opportunity. So now we're going to scale in or zoom in to the 1 minute, and we're going to go back to that 6:30. And we're going to 6:30. 6:30 is right here. We got to zoom in real good here because we're on the 1 minute chart. So basically what we were seeing here was we first want to identify now proper trend. So from this tip of the wick here, we want to touch as many wicks as possible without compromising the body of the candles. And my entry was at 7:07. So we have the tap wick here once, and then we have twice, and then this is that third tap indicating a confluence for a buy opportunity. So that's one confluence trend line. We have market structure. We have price making, printing higher highs and higher lows based off the 1 minute time frame. So we have additional confirmation there. And then also too, as far as the fib, we're going to bring it from this swing low here. This also essentially is the last, I would say this is the beginning to an order block when this was forming. And then now this pushed up a lot of imbalance, making this a potential fair value gap for in the future. So we actually did it from that swing, and we're going to pull it all the way up to here. And this prompted us to be in that 38.2, which is that continuation trend signal based on the Fibonacci. And then we also did try to look for a Fibonacci trick where we took it from this swing high to this swing low. And that fib trick is basically confirming the move has been completed within the move of the retracement. So we're going to draw it from here. And this is that box of that completed zone, deleting the fib for clarity. So for me, I have multiple confluences looking for a strong buy opportunity at that 707 timestamp. And then we also do have a dynamic support as far as the 1 minute 50 EMA. And then we also have that price action bullish engulfing candle here. And we also have indecision candle. Price comes back and retraces. And we actually entered at that 707 candle. So we're going to enter and show you where we entered. We entered right around here. We really wanted to enter here, but we actually got a better entry because of the pullback. And we were risking roughly just 25 pips. And we were targeting the minus 27 is the first take profit. And then the minus 61.8 is our primary target. So we actually ended up taking profit at 4079. So it looks like take profit 1. And I'm going to tell you why we didn't maintain. So there actually was, jumping back up to the 15-minute chart, there was you want to look for a higher time frame bias, maybe some type of unmitigated areas point of interest. And for me, based on what we saw at that 6:30 time frame, let me put this magnet tool on here. From this tip of the wick to this swing high brings us to, this would be the overall session bias for our long-term target. So that was what I initially saw. And what had happened was, basically, when price hits take profit 1, we like to see strong variations of momentum. We don't really like to see exhaustion. I was seeing a form of exhaustion. Price came up, and then there was a minor shift in the market where I did not want this swing low to basically get broken. Price then breaks below it, and then we wick back up and tapped us just out of the market. We had a set take profit exit entry at that 179 level, bringing us out of the market at a minus 27 level. So this trade was roughly almost just over a 1 to 7.5 risk to reward, a very healthy risk to reward. This was 189 pips. So times that by your lot position, if you're risking $10 per pip or $100 per pip, you can do the math. I'm not here to gloat. I'm just here to educate. So then we also did have another opportunity at 8:40 a.m. So it looks like we entered the market. Let me check my MetaTrader. Yeah, 8:40. Okay, so we had another entry here at 8:40. So what I did was I saw the potential new trend line. I understood that we are still trying to complete this overall session bias at this 4088 level. Ended up drawing my trend line. We're still maintaining market structure, and I'm pretty sure I drew it from either this. It might have been from here. Yep. So I tapped respected the trend line once, twice, 3, 4, 5, 6, multiple times. And the entry was at 8:40. 8:40, we entered the market, 8:40. So we were looking for a deeper retracement, so we entered on the close of this. So 8:40, and we put a 25 pip stop loss, and we were trying to target that overall move initially as well. And basically, we also then drew our fibs from this swing low to this swing high, giving us a deep retracement, respecting that 88.6. This is one of the deepest Fibonacci levels that I will execute a trade on. And then I did look for a fib trick as well, which was the swing low or swing high to this swing low, and which brought us to the zone, giving us another confluent of a completed zone roughly in this region here. So that was giving us a strong bias for a buy as well. And the take profit 1 and 2 were above our overall session bias, so we did not want to target that high. And long story short, based on the multiple confirmations and confluences, we actually ended up getting stopped out. I want to say I didn't get stopped out till here. I want to say it was more like 9:30 something. I might have just barely missed the stop loss. But overall, the stop hunts came and wigged me out. And again, it's part of trading. And now that I'm looking at it in hindsight, you know, there is market manipulation, liquidity right here. There's equal lows, and then the stop hunt is right there. So equal lows, stop hunt, reversal, rally, bullish engulfing, a lot of imbalance, and then rallies in your direction. So again, proper risk management is key, so not worried about it. So, and then we also did have another opportunity at 10:13. So we're getting close to the end of the session. 10:13. So 10:13 is roughly somewhere along here. And what we did was we grabbed it from this tip of the wick here, and we actually drew it, the trend line from here. 10:13, where's 10:13? So basically we still are maintaining that structure to our higher time frame bias. There's higher highs and higher lows. We also just understood that there was a liquidity pool down in this region, so we're still looking to take out some short-term buyers and wanted to basically stop hunt retail traders and then capture the longs later on. So for me, I had a strong bias for price to continue to the upside here. We have a trend line being respected. There was some slippage eventually after we were already in the trade, but at that point we were already in profit. And then as far as using the Fibonacci, I think we're at roughly, was it the 50% Fibonacci level, which is a pretty good level. We were actually, looks like we were, yeah, we just tapped the 50%. So it's pretty strong optimal entry. We're still on the buyer side of the market as well. And then once we enter the trade at 10:13 a.m. based on some indecision candles, there's price action, there's a bullish engulfing, and we enter on that second bullish engulfing for a more safer, stronger confirmation as well. And 25 pips were risked. So let's see here what happened here. So we entered, we actually might have, let's see, it says our entry is 2065. So 20, so let me just do it like this so you can see exactly where I entered. So, 4065, sorry, 4065. So basically, this was our entry, and then our stop loss. Our stop loss was right here, and this is how we maintain that trade there. And then we took price all the way up to take profit 2, and then we let the runner run based on our overall bias. As we were done for the day, we were already in profit. We were 2 for 3 for the trade so far, and basically this is a risk-free trade, and this was about a 1 to 9, almost a 1 to 10. So those are the trade setups for the day. And again, you don't have to trade and be in the markets 24/7. You can just be on the charts for a couple of hours. Pick a strong volatile session, focus on 1 or 2 pairs depending on your strategy, and you can extract daily profits on a regular basis. So if you're liking these videos, press the like button and subscribe.